afternoon, it's Damian Power with Mono Mortgage First Choice. Happy Friday to you.
Finding me. Third eye opening up so I can see. Finally I can breathe.
Damian, how are you doing, sir?
Pretty good, Chris. How about you?
I am doing wonderful. For those watching, we are with Damian Power with Motto Mortgage. Damian is a mortgage broker, works with several different lenders and makes sure that that everyone coming in gets paired with the type of lending that they need. And no one can sell it better than Damian here. So Damian, if you would, tell us a little bit about your business and give us a little bit of a background.
Yeah, so I work for Motto Mortgage First Choice. The company is a mortgage brokerage. I'm a loan officer for that company. But just as you said, Chris, I go shopping for our clients. So they fill in one mortgage application. We do a credit review. And then I can reach out to 15 wholesale lenders. They can come back with the best rates, best fees, certain kinds of programs. You know, a lot of people, they have the regular conventional FHA type loans. They're in that box. We can go outside that box. We can deal with self-employed, people without any income. We can get a loan for that as well, which is awesome, both on residential and investments. So yeah, we have lots and lots of programs for lots and lots of different people. So it's pretty awesome.
How did you get so what was your experience coming to Houston? Were you born in Houston? Did you travel to Houston? Tell us a little bit about your history.
Well, with my accent, I was obviously not born and bred in Houston, but I've been here for almost 22 years. I came here Christmas 2000 for a job with Compact Computers. Mm-hmm. That seems a lifetime ago.
Did we talk about that? What year were you with Compact?
From December of 2000 to about 2004-ish, okay. Or 2005.
Gotcha.
Yeah, I went through the merger and stayed there for another year after the merger with HP. Okay,
gotcha. I think we talked a little bit about that because my stepdad was with Compact Computer for a little while, Brian Leister. Okay. But yeah, it's it was always a great thing in my family because we always got computers real early on in that process. We had internet and all that stuff in the mid 90s. It was an interesting time. So anyways, Compact to, so you came to Houston and joined Compact through the merger.
I came over from England, got an offer to work with Compact, and they said it could be a 3-month contract. 22 years later, it obviously worked out pretty well. But after the merger with HP, I got into oil and gas as a technical writer, technical editor. I'd done some training development, and I was in that for probably close to 12 years, different contracts, different companies, and then finally got laid off from Chevron after 4 years, just right after Harvey. And a friend of the family was looking for a loan officer for a mortgage brokerage. No experience needed. And I was like, well, I'm out of work. Why not give it a try? So 4 years later, here I am, still in the mortgage industry, riding that roller coaster.
And your background with Compact and was it Chevron?
I was with a lot of different oil and gas companies, but Chevron was the last and the longest I was with.
Was that mainly training and developing? What was your roles there?
I was a technical editor. So when the engineers wrote documents, I would go in and just make sure they read correctly for people in the field.
Gotcha.
Engineers love talking engineering. People in the field aren't necessarily at that level. So I had to be the person in between that, kind of went from engineering to English.
And what was it that attracted you to the mortgage industry? I would imagine that just your experience level, you probably had a tremendous amount of different options to choose from. What was it about mortgage that was calling your name?
It seemed like an interesting option or an opportunity. I really, I bought and sold homes within the Houston area, primary homes for myself. So I kind of enjoyed the real estate side. So I was like, it's could be a good opportunity just to, get another string on my bow, basically. really didn't know much about it until I got into it. And then, I spent a year with that first brokerage, found a great brokerage just on Grant Road. Nirvana there was an amazing mentor to me. And then Motto Mortgage come along. I mean, they're huge. I think they're the third biggest mortgage brokerage in the country, and they are actually owned by Remax. So that was a good opportunity for me to get in front of a lot of different realtors. Even though we are separate, we work with any other realty company. We don't mind. We'll work across the board. But just seeing, these two big names, and they were offering me a job, it was time to move on to that company there.
Yeah, I would imagine it's the same way, real estate, insurance, lending, or mortgage, the brokerage side of mortgage is kind of a similar type of pay scale. I mean, you're especially early on in the process, you're doing a tremendous amount of networking. I'm assuming it's very similar. The first 6 months to 12 months, I mean, you're really trying to work to pay bills and get those referral resources. What were some of the hurdles that you saw early on in your career with them, and some of the successes that you saw that have kind of made you what you are today? Gotten you to that fourth year where you can say that you're a success within that industry. Obviously, every day is as good as the amount that you're bringing in currently. But what are some of the hurdles, some of the successes that you've seen so far?
Well, the biggest hurdle is that it's 100% commission. So I have to kill what I eat. That is sales, you're in insurance. It's the same thing, that we have to go out and find clients. In the mortgage industry, I'm sure it's the same in the insurance industry, that people may not trust you on both the buyer side and the realtor side because you're new. They don't see any results, but it's hard to get results until you get clients. But then, it is that snowball effect. As you get further into the industry, you do better and better. People start trusting you, seeing that you're doing a great job, and that's where more business comes. And so, more experience, your snowball gets bigger. But yeah, that first year was tough. It's funny that I closed my first deal literally a week after I got my license. Mm-hmm. I was like, what are people talking about? This is easy. 1 week in, I've already got a deal. I think it was another 9 months until I got my next one. So,
what was some of the biggest pieces where you said, okay, well, so like maybe like a referral source, or what were some of the traction areas that you got early on that said, okay, well, I can do this full time. This is going to be good. What were some of those early, referrals that you got? Were they mainly through realtors, or were they through other sources?
It was mainly through realtors to start with, but I have a certain sphere of influence that I did pull on and still pull on. I'm with Cypress Creek Fire Department, so I had a captured audience there every time I went on shift.
Gotcha.
I normally work with different people every shift, so now everyone knows what I did. Back then, at the early days, I was like, what I do apart from this, handing out my cards to everyone. So that was a good. I've done quite a bit of business there. But the way business is for us right now, people always go to realtors first these days. It used to be the other way around before the 2008 crash. But now people go to the realtor and they have their loan partners that they trust. And, our job is to get both sides of the field, but mainly the realtors. That's where a lot of the referrals come from.
So if I'm a realtor out there watching, what are some of the value that you can bring, from your side that maybe, a direct lender couldn't provide, or maybe just some additional support that you can bring that other lenders, couldn't? What's typically your value sell to the realtors out there?
I want to get the loan, and I hold the hand of the client the entire way through. A lot of these online places, every time you call in, you'll get a different person. With me, you'll get me every single time, or throughout the whole process. Yes, the loan has to go out through the processor and underwriter, etc., but I am on them the entire time. I can speak to everyone at every stage of the process. I can say, yes, our rates are better, our fees are better. Everyone promises that. But with a mortgage brokerage, I can go out and find that best rate. As I said, we've got 15 wholesale lenders, and they're all in business to get out of business. So, that is a great option on that side. Everyone wants speed as well as savings in this industry. Our average clear to close time is 12 days, which is incredible. I think our average close in is mid-20s. I think 25 or 26 days.
Oh, wow.
And I think in 4 years, I've only gone past my closing date twice. So I'm pretty happy with that.
That's awesome. Yeah. I mean, I've dealt with closings for quite some time, but it's typically, we're at the tail end side of it and we're getting things done. And I mean, I can tell you this, if you don't have someone that is in your position, that's got everything scheduled out, it can turn into quite a bit of a time extension on something that you're expecting to close, within that 30 to I would say 40-day period. Damian, let me ask you this. I first noticed you on social media. You have a good following, and you do some pretty nice content. When did you start getting involved in the content creation and social media? And it's within the financial sales side, mortgage, realtor, especially insurance. Insurance is one of the more boring topics out there. So you don't see a whole lot of content. You have maybe like a handful of content creators that are doing insurance type of content creation. But what moved you into that direction? When did you see it? And how's it paying off?
Well, I actually went to school for marketing long time ago. That's actually where I met my wife, in marketing class. So my marketing must have been pretty good back then. So it worked on her. And we just done 15 years. We just had our 15-year anniversary. So my marketing still must be working. So
yeah.
But on the loan side, I was told from the beginning, video is the way to go. So for 4 years I've been pushing videos, and I hope to say they've got better through the years. When I first started, it was literally my phone sitting in the front of my car talking about loans, which, I was trying to tell everybody about everything back then. And as you say, there's financing it can be kind of boring as a whole. But on the home loans, we've got so many different things I can talk about that I tried to make it more interesting as the years went on, and then interspersed it with a little bit of my personal life, because I don't want to be that person you just call, we do a loan and we never speak to each other again. Mm-hmm. I want my clients to know me a bit so they can say, hey, we've got this in common. That's why we connect well. And that's, I found important that video is the number one way to push. I push static stuff out as well, different documents, but video has made a huge difference to my business.
Yeah, even for me, just having the reoccurring content online, that has, my name, what I'm doing, and out there just, repetitively. I've noticed that even just within my friends, my family, outside of, just giving them a call and asking for business, they're the first, I'm the one that they think of when the insurance rate increases. Are you finding that, within your immediate sphere, friends, family, I would say the branch beyond that would be like your referral partners. Do you find that they see that content, and when they're ready to make ready to start a conversation, they give you a call? Has that been kind of the number one, or have you seen anything from just kind of folks that you haven't met before, new leads?
I think new leads, they tend to talk about the regular kind of home loans, the conventional FHA. But people that know me, they start looking at more of the investment side. How can they grow their portfolio? Mm-hmm. So they're seeing that I know what I'm talking about across the board. And yeah, those more trickier questions are coming in from people I know. The ones that just see me and call me out the blue, yeah, they're just looking for just a regular first time, home buyer type thing.
Well, does that social media content extend to folks that you don't know, or is it mainly folks that you do know within your sphere?
It's the way, especially with Facebook, the way it's working right now, that you do get more spread across people that you don't know. Mm-hmm. I push into a lot of like the big barter boards on Facebook. I always post on those, and they're obviously people I don't know, but once in a while I get hit up by, hey, I saw a funny meme that you posted on, Cyprus, whatever Facebook page. And, I actually got one. I've been working with a guy for almost 2 years now because of that. Because he's like, hey, I saw a funny meme that you posted about real estate, and he just called me out the blue. So it works both ways.
Yeah, those are my favorite. Let's talk a little bit about where the market is. And so, we've gone through, the last 2.5 years. We've gone through one of the largest growths that I know the city of Houston's probably ever seen. I mean, outside of maybe the late 70s, mid 90s. I was looking at I was watching the Harris County appraisal district commissioner. They was talking a little bit about how I think it's like 85 or 90% of all of Harris County has increased their property taxes by like 25% on average, which is, just insane numbers when you look at how many people are moving here, even with the new construction. So this past, 2 months, 3 months, we've seen the interest rates increase. And so, from your outlook, where do you feel the market is heading? Give us some advice to some of the clients that are maybe on the fence of a new purchase, or selling their home. What's your outlook on the market, and what's your advice to some of the customers that are looking to shop now?
Well, I've always told people that it's never a bad time to buy a home. Sometimes are better than others. That's the way I look at it. Real estate is never going to go away. You're never going to lose money on real estate. It might dip, but it will always come back. And isn't it better to buy a house and pay a mortgage than just rent? Then you've got nothing. All you're doing is keep making the landlord rich. So you can either buy yourself a house or buy an investment property, or even do both. And then you've got the best of both worlds. But with the market right now, it's something that nobody has ever seen. So we've got interest rates going up. We've still got house prices that are slowly ticking up. I think the house price increase is slowing down, which is a good sign. And then, of course, the tax rates are going up. So you've got three things that are making it more expensive to buy a house. But overall, I think in the Houston area, the homes are still pretty good price range. I think it's like 350 is the average price for a home in Houston, something around there, which it might be on the high side of affordability for a few people, but it's still not too bad to get into real estate. So, but I feel right now, coming into the summer, interest rates have leveled off to, I think we're at high fives, which is still, pretty good. But it's the tax districts that are causing the biggest issue, I find. They need to figure out that you can't raise taxes that fast in that shorter amount of time. If you're homesteaded, then your home's only gone up 10%, but there's a lot of people that weren't for different reasons. And I saw 75, 80% tax increases, which could force people out of their homes because they're budgeted for a certain amount. And then if it goes up, another $500, $600 a month, that's a huge expense.
Do you see a lot of, obviously this is, I don't want to get into personal information, but do you see a lot of your average home buyer that comes through? Are they pushing their budgets to the max? Are they, do you see customers being a little bit more frugal when it comes to the amount of home that they're buying? What's typically the average that you've seen within the last year or two to get? And I ask that because, the biggest outlier is, we look at listing prices, the listing prices have increases and the comparables, but a lot of times a home will close, I've saw, homes close like 30,000 over asking, waiving inspection. And that was with, cash buyers, the cash buyers list one might be 20 strong within a home offer. So I'm curious if that's pushing a lot of clients to push budget to get into these homes. Is that something that you're seeing on your end, or is it, folks pretty much meeting those guidelines that you're recommending?
With the cash buyers have been the issue, yes, because they are coming in, offering silly amounts over asking price. But with someone that comes in with a home loan, we have, hard stops depending on what kind of loan. So say, conventional, we can go up to a 50% debt to income. And so it can kick them out of a certain amount of a higher priced home. The people getting a home loan can't just walk into any home and get it. So that is what's causing the trouble. They could afford a $300,000 home quite comfortably, but then, that cash buyer comes in, throws another 30 on top, and they're done. But I'm finding people are trying to stay inside their budget, and that's what's frustrating for them, because they don't want to spend $350,000 on a $275,000 home. That's common sense. You never want to overpay, especially when you're paying the bank. So it's getting to a tricky point right now. The home prices are holding steady, and I'm hearing less and less cash buyers are in the market. So a lot of offers are being accepted as this price, and I've even heard, which is great news if it's true, that the sellers are actually giving concessions back, and we haven't heard that in probably a year, which is a huge deal. Yeah,
that is it. It's when I was like, I had the privilege of, when we were first getting, the agency started, I had the privilege of helping agents show their homes. And I went on probably about 200 home showings within a 4-month period. And, I got to see, average home costs. I was looking at like roughly around like $150, $160 per square foot in the Houston area, greater Houston. The biggest thing that I noticed was, if this home market is going to cool, the 20 cash offers, waiving inspections, getting to that place where, you had some negotiation level, I think that, like you said, that's starting to come back. I think that's a sign of maybe not a drop off, but just a cooling of the growth. Is that what you're seeing?
Yeah, that's exactly what I said. Yeah, which is good, because the house price, the comparables are going to stay there for a while. Mm-hmm. I don't think there's ever going to be a major drop in house prices. But what people have got is a huge lump of equity when they go to sell. So if a buyer comes in and says, "Hey, I want to buy your house for $300,000, but can you give me 10 grand back in concessions or pay my closing costs?" Or what we're even doing now is explaining that you can take some of that concessions and lower your interest rate. You can buy down the rate to something lower. So that's always a good option to talk about with both sides. But overall, I think, it's going to level off, and more people are going to be able to afford a house.
Well, that's good news. Lee, I have one question for you with regards to like companies like Orchard and Open Door. I think there's some new tech lending companies that are helping clients get those cash offers, helping clients to get a cash offer based on either equity in their home, or I think if they're like a first-time home buyer. Do you see other lenders competing with some of those type of lending setups? I'm not an expert in either of those companies, but I know that they're new to the market. Just your input. If you have some background in that, I'd love to hear it. Yeah.
So some of those tech companies, they're good for what they do. If you're going to sell your house and you want to sold fast and closed incredibly quickly, something like Open Door is great. Downside on that, they're going to offer you way under what the house is worth. And unless your house is in perfect condition, they're going to hit you with costs to fix things. So you're going to walk away with considerably less than using a realtor, even with their 3% or 6%, whatever the deal is on that side. Even with that, you're going to walk away with more and probably sell the house, a few days slower than Open Door or a company like that could sell it. It's up to the individual how quickly you need that money, how quickly you want to move. But there's another company called Ribbon that we use. So they will put in a cash offer and we will do the financing behind. That's slightly different. That's if you've got a buyer that wants to try and get that house with cash. But
that's what I was interested in, because it seems like Open Door. So Open Door has a cash offer financing, and so similar with a company called Orchard. Have you heard of heard of Orchard?
I've heard of them. I don't know much what they do.
So some of these newer, they call them tech disruptors, but I mean they're just new lending companies that are just have a different plan. But I was curious if other traditional lenders are stepping up to compete with them on the cash. The cash offer process that they're doing is the one that's interesting to me, because especially with the last year and a half, they had a lot of cash buyers coming in, and new home buyers were able to access some of those lending options to do a cash offer on some of these homes. So I was curious to get your feedback on that. If you heard, I know it's pretty new, so I'm not sure the background or the competitive level.
I like the way Ribbon works. I'm not sure about the other companies because we've actually gone through training with them, and our company is in with them and want to work with them. But the way they work is that they put in a cash offer. We have to do the regular financing behind the scenes. Mm-hmm. That person still has to qualify for that house. Gotcha. Ribbon will come in and put in a cash offer. If we can close with the financing, then we will. But if we go past a certain date or the financing falls out, then Ribbon will actually buy that house for cash and give that buyer 6 months to straighten out their finances.
Gotcha. Yeah, that's exactly what I was interested in. So that's a company that you work with. Is that a newer company or traditional?
It's been around for about a year, I think, maybe a bit more. Or I've heard of them for about a year. I haven't actually done anything with them. We've just gone through some of their training, and what they say sounds awesome. All our wholesale lenders are on board, because they make sure that our client is fully approved. They Gotcha. Won't deal with us unless we can tell them, hey, this person is good to buy this house with you or without you. Mm-hmm. But there is a fee associated with Ribbon to use their cash offer. So it's not for everyone, and not everyone can afford it.
Which kind of brings me to the final point here in how useful a broker is and how many different options there are out there for, a family, depending on the market. If you were buying within the last, year and a half to 2 years, Ribbon might have been a good fit for you if you wanted to utilize that cash offer. Depending on the fee level, you're looking at FHA versus conventional. I think there's USDA loans out there that you can purchase in certain areas. Damian, give us kind of a quick synopsis of maybe some things that are going on right now. I know that we kind of already summed up the current market, but if you're a new home buyer, if you're on the fence, what would be the process moving forward if you're looking at homes currently?
So if you're looking to buy a home, you definitely need to get pre-approved to start with. So mortgage brokers are the best option. Biased opinion, but it's true. So, and it's very simple. We just need a mortgage application, then we do a credit check. And at that point, we can make a plan for you. So depending on your income and credit, you could go FHA, conventional, VA, whatever box you fit in. And each of those wholesale lenders have different guidelines. So I might have someone with a 580 credit score, we can go FHA. They might even have less. Between 500 and 580, we can still go FHA. So we never count anything off. What I'd like to say is I don't say no. I say not yet. So, if you're not ready right now, we will work a plan. Maybe it'll take 6 months or a year, but I will stand by that person the entire time. Of course, if they want to, if they're happy renting for the next 2 years, then, we'll stay in touch. But otherwise, it's a lot of the time, it's just a couple of mistakes on their credit that, they just have to, pay a couple of bills on time or get rid of a collection, and their score will skyrocket and we'll be in a good spot.
Yeah, so if someone's on the fence around that 500 rate, and then, so, if they're looking at like soft credit inquiries, because I know now more than ever, it almost seems like every type of credit card or any type of, financial, financial instrument that you're using gives you soft credit inquiries. What would you suggest to get that, for them to know their actual score to start that process?
So if they are on the fence, and if they come to me and say, hey, we think our scores are low, or we don't know our scores at all, I can do a soft credit pull. So we don't have to do a hard one, and that won't ding their credit at all. So at that point, it will give me their full profile and their credit scores, and we can make a plan without any issues on their credit. So that's a lot of places don't offer that, but we've offered that for about the last 2 or 3 months, and it has made a huge difference to our clients.
Wonderful. Have you seen, so what's the quickest turnaround from someone that's, say, like around a 500 getting to that level where they've qualified? What would you say the time turnaround is for that?
It's hard to say, because there's so many issues as to why someone's score is what their score is. A few years ago, I had a guy, he had a 550 score. He had no credit. He'd done nothing wrong. He just hadn't used, he bought a truck and paid it off pretty quick, and that was it. From the, that's all he had on his credit score, and that's why it was low. So that was a pretty quick turnaround. You can jump on, become an authorized user on someone's credit card, and that could bump up your score in a couple of months. Get a secured credit card, pay on that for a couple of months, that will boost your score. The other side of the coin is, if people don't pay their bills or they've got collections, that could take months or even years to turn around, especially collections. That's so hard to get them knocked off. That's why you need to speak to a credit professional at that point. But, as I said, so it could go from a couple of months up to a couple of years. But I will explain that to them when I speak to them. I'm not going to kid them or lie to them and say, hey, this is where you are. This is what we need to do.
Wonderful. So, Damian, I am going to go. Let's go ahead and wrap up the call. I will go ahead and pass this to you. If you have any closing remarks, where they can find you, what you have going on this week, any specials or anything that you'd like to let everybody know, feel free to roll us out.
Okay. Well, the best way to contact me is by phone, 832-567-8493. My email is damian.power@mottomortgage.com. As I've said, we offer all kinds of different loans for people in different positions. We still have a down payment assistance program. That's going to be huge this year, especially as I mentioned, concessions are being paid. That will help you with that. Not many people are offering down payment assistance programs right now, but we've still got an amazing one. I'll be at an open house this weekend in Cyprus. I'm not sure what the address is. I can't find my piece of paper right now, but I'll be out there. So there's plenty of homes for sale, plenty of open houses. So come on out, give me a call, and let me help you.
Damian, I appreciate you, sir.
Right. Thanks, Chris. I appreciate this.
Talk to you soon.
All right. Thanks.